Hello everyone. Yesterday, one of the main reasons for the IT stocks negativity was related to a proposed new US bill called HIRE Act. But again, then in the night, Infosys ADR increased about 2.5%. So let's look about it first and then we'll discuss our regular pre-market report for today, 9th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. I don't know who influenced who, whether market influenced media or media influenced market. Either way, there were some buzz around it yesterday. And hence, Indian IT stocks did had some pressure. And if you see the top 5 Nifty negative contributor, 3 of them were IT stocks. So I think it's good to know about it. First of all, what is this HIRE Act? HIRE Act is a new piece of legislation which was introduced in the US Congress last Friday by the Ohio Senator. The full form for that is Halting International Relocation of Employment Act or HIRE Act. The key provision of the bill is to place 25% tax on the payments to the foreign companies for the outsourcing service they provided. To be honest, it's a scary proposal and nightmare for the Indian IT companies. However, I don't think we need to panic since unlike India, in US, any state senator could propose the bill in the US Senate and that's what happened last Friday. And similarly, in the history, there were tens of similar bills were introduced in the Senate for placing tax on the importing service, but none of them had been passed yet. If required, please pause and have a look. These are the stages for the US bill to become law. So at present, it just introduced in the Senate. Then it has to pass it to the Senate committee review. Once they approved, it will have the floor test in Senate and House of Representatives. And then finally, after the presidential signature, it will become a law. For the moment, there is not even an indication that this proposal will go to the Senate committee review. So I personally believe it's just a publicity stunt. Let me tell the logic why US won't implement this. If required, please pause and have a look. This is how much US and India did the service trade in the 2024 financial year. Being a world IT hub, we know India exporting IT services for about 340 billion US dollars and importing about 180 billion US dollars. I'm not denying it's a huge business. At the same time, please have a look at the US trade. Unlike merchandise goods, US are exporting more digital services like Google, Facebook, etc. for over 1 trillion US dollars and in return, they were importing only about 700 billion US dollars worth of goods. So they're having 300 billion US dollars worth of surplus over other countries like EU, Canada, China and Australia. Hence, already Canada and Europe are threatening to put digital service tax on US companies in response to this tariff, which Trump is fighting for not to. So, implementing this act will create severe backlash for US rather than to the other countries. Hence, on their own interest, I don't think they will implement it. Either way, we can't expect and trust the Trump administration to do the sensible things. So there is a remote possible chance for this bill to pass through in the Congress and Senate. So the takeaway is, for now, we don't need to worry about it. This bill becoming into a law is very much unlikely, but still we need to keep tab for any potential development if any means. As I said, I think it's just a publicity stunt since our media will make everything as trending topic. Then about Infosys ADR last night positivity is because in the aftermarket hours, Infosys board submitted the regulatory filing that on coming Thursday, September 11th, the management board is seeking approval for the share buyback asset. They haven't mentioned about other details like how much, at what price, etc. Rather, they just said they are considering buyback, which itself very positive. And hence the reason last night Infosys ADR increased above 2.5%. Then coming to US market, because of the very poor jobs data last Friday, which we discussed in detail in the last pre-market video, increased the optimism of rate cut in the next FOMC meeting, which in turn made the US market to close positive. Dow Jones increased 0.25%, S&P 500 was up by 0.21%, and Nasdaq outperformed all, increased 0.45%. In case of VIX, it's same as Friday, around 15. Then about oil, it increased 1% due to the short covering. Whole last week, oil was under pressure on the expectation of output increase proposals in the last Sunday OPEC Plus meeting. Now that meeting is over. They did increase the October month production plan, and Saudi Arabia cuts the official selling price for the Arab light oil, which all negative for the oil price. Despite that, oil price increased, so I believe it's just a short covering. At the time of this video, WTI crude trading at $62.5 per barrel and Brent crude trading at $66 per barrel. Regarding Indian ADR, Infosys was the major gainer. Even then, as it is, all the other major stocks also increased and closed positive. Here, the banking stocks positive close, it seems aligns with the Indian market price action, and arbitrage wise, there is no fresh price movement indication. However, about IT stocks, it's clearly having the positive arbitrage difference. In line with the IT stocks positivity, GIFT Nifty early morning today, it increased and trading at 24,960, equating that with the spot market. For now, it's indicating the gap up opening of 60 to 70 points. Now, moving to new India related info. Yesterday, Reuters.com released an article about the Qatar-India Free Trade Agreement, which according to some government sources is expected to be finalized by the end of October. I don't think this will influence the stock market, but if any, it's positive for engineering goods companies like L&T and agricultural stocks. Second, compared to July month, India's coal production increased about 8% despite the monsoon problem. Hence, we could say Coal India will be on focus today. As a summary, global momentum improved on the expectation of rate cut. In addition, all the important macros, whatever released yesterday, such as Japan GDP growth data, Germany industrial growth, and China's trade data, all came as very good. In addition, there are some positivity around the IT stocks, all together for now indicating the gap up opening. Then about institution, yesterday too FI was net sellers. They net sold for near 2,200 crore rupees and DA was net buyers. They net bought for 3,000 crore rupees. And moving to participant wise open interest analysis, in the index options at the end of yesterday, client was holding net near 10% open interest favoring bullish position, whereas on the other hand, FII and proprietary traders holding net 6% and 3% respectively of their open interest in favor of bearish position. Please note, today is the weekly expiry, so we don't need to give much importance for the index future position. If required, please pause and have a look. Then, as per stock open interest, Trend, Blue Star, Persistent System, HCL Tech, Apollo Hospital and Suzlon Energy are some of the 54 stocks that got an increased open interest along with a negative close indicating the short build-up. On the other hand, Maruti Suzuki, UPL, Manappuram, IAFL, Motherson Sumi, Bajaj Auto and Eicher Motors are some of the 78 stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out, as far as I know, it's just EAA short-term energy outlook that we need to keep an eye out for today. Coming to technical, Nifty opened 60 points gap up and gradually increased to near 24,900. However, due to profit booking, it closed at around 24,770. Thus, on the daily chart, Nifty formed a small bearish candle with a long upper shadow, indicating a selling pressure at higher level. Despite this, Nifty managed to sustain above the 10, 20 and 100 exponential average as well as the middle of the Bollinger Band, which is a positive sign. In addition, RSI climbed above 50 mark, showing a bullish crossover, and MACD also maintained its positive crossover, both signaling underlying bullish sentiment. Hence, even though with all the positive signs, Nifty lacked strong momentum and remained range bound with upper resistance at 24,900 to 25,000 and immediate support at 24,700. And for a decisive up move towards 25,000, Nifty needs to clear 24,800, which is near the 50-day exponential moving average. Until then, consolidation is likely to persist. A close below 24,700 could increase the selling pressure towards 24,500. In case of Bank Nifty, similar to Nifty, it also opened 100 points gap up and increased to 54,500 mark, but the profit booking made it to close around 54,200. Thus, on the daily chart, Bank Nifty formed a doji-like candlestick pattern indicating indecisiveness aggressiveness among buyers and sellers. Bank Nifty continued to trade below all key moving averages 10, 20, 50 and 100 exponential moving average and the middle of the Bollinger Band. RSI was at 39 but had a positive crossover indicating a mild improvement in the momentum. Hence 53,900 to 54,000 zone expect to act as the crucial support, and on the upside 54,400 to 54,500 is the immediate resistance. On the options front, the maximum call option openers was at 25,000 strike followed by 24,900 and 25,500 with maximum new call option rating at 24,900 strike and then 24,850 and 24,950. On the put side, the maximum openers was at 24,500 strike followed by 24,700 and 24,800 with maximum new put option rating at 24,800 strike and then 24,700 and 24,850. Thus, from options data, Nifty is likely to trade in the broader range of 24,500 to 25,000 in the near term. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.